Greetings and welcome back to the tax return video series. This time we're going to prepare Schedule E, or at least most of Schedule E. All right, so let's get started. We have updated information for Juan Alonso, but let's say that instead of being single at the end of the year, he got married. So he and Rosa were married in August. Rosa owns a rental home in St. George that she actively manages, in addition to having a full-time job where she earns $48,000 with federal withholdings of $5,200. She did not use the property for personal purposes, although it was vacant for 2 months. So assuming no depreciation, because that's covered in a later chapter, and no passive loss carryovers, she reports the following on her rental: rental income, cleaning, mortgage interest, insurance on the property, real estate taxes, and utilities. So let's say that Rosa is also an author, and she received $2,500 in royalties for previous books that she authored, and she incurred $400 in legal fees in connection with her royalty income. So the wages would be added to her 1040 as well as the federal withholdings. But the rest of the information goes on Schedule E. So let's go ahead and take a look at it. Here we have a Schedule E, and notice that it starts with the name of the person shown on the return, which is the taxpayer, Juan. Even though Rosa owns the rental property, this is still calling for the taxpayer. All right, so then Juan's social security number. Then we start with some questions. Did they make payments that would require 1099? Let's say yes. Did they or will they file them? Yes. All right, so 1A, we're going to start off with the physical address of the property. So here is a made-up address for that property. Then 1B, what type of property? Well, we look at the list. Let's say it is a single-family residence. So it's a type 1. And then for rental properties, we have to look at the fair rental days. Well, there were 0 personal days, and the property was rented for 10 out of 12 months, so that was about 305 days. All right, so then we go to income. I'm going to go ahead and scroll for that. So income, rents received in item 3. So again, we are property A, and that was rents received of $14,350. And then we show the expenses that go along with that property. So let's see, cleaning, there was $3,000. Insurance, I believe that was $575. Mortgage paid to the bank, so mortgage interest, $7,800. And then let's see, there were also real estate taxes that would go on line 16, $2,400. And then utilities, I believe $1,825. Now, if there were other expenses that were not included in any of these items, they would be listed on line 19. Now, for a later chapter, if there were depreciation on the property, it would go on line 18. All right, so we're going to add up all of the expenses. So 15,600 are the expenses, and then we subtract line 20 from line 3, and we then have it is a negative 1,250. Well, we have a loss here. And of course, this Form 6198 we look at to determine at risk. So in this class, we are assuming that all investments are at risk. But we do need to look at line 22, the deductible rental real estate loss. So we don't know if this line will be a loss of $1,250, if it will be less than $1,250, or it will be 0. So we are going to actually have to prepare Form 8582 before we can continue with the rental property. All right, but before we do that, in our next video, we need to deal with the royalties. So I'm going to scroll back up and notice that we have a spot for royalties received. So we are going to show royalties. So for item B, which is this column right here, is going to be for royalties. So therefore, royalties, the type is a 6. So we're going to put in type 6 there. And then in column B is where we show the royalty income and expenses. 2,500 income, and let's see, professional fees, 400 there. So I'm going to scroll down. Let's see, that was too far. Here we go. Total expenses, 400. We subtract line 20 from line 4, and we get 2,100. And at that point, we actually need to stop because we don't know how much we can put in here. We don't have a loss in 22. So once we know how much loss we have here, we can then continue with the form. And so that wraps up this video on preparing Schedule E. Come back next time for the video on preparing Form 8582. Once we complete that, we will revisit this Schedule E and finish it up.